Welcome back. You're still tuned into Trading Hour. Let's talk about some market fundamentals. Viraj Mehta from Enigma Investment Partners is joining us now to discuss his portfolio construct and some of the stocks in his portfolio as well. Viraj, good morning. Thank you so much for joining in. Some interesting names that I saw. You have around 18.5% allocation to iron and steel products, out of which you do have Surya Roshni there. I wanted to discuss that in particular. Why such a big proportion to just that one sector that you have, and specifically Surya Roshni?
So first of all, thank you so much for having me on your show, Sonal. Um, so Okay, so the whole construct we thought about when we look at a portfolio construction is not only to look at the valuation, but also to look at the earnings growth and how those earnings growth is going to come, whether from volume growth or margin improvement. And if you look at this industry, last year went through a lot of trouble because the prices of steel kept on declining, and all of these companies, right from Surya Roshni to the market leader like APL Apollo, a lot of these companies had significant inventory losses last year after having 2-3 tremendous years post-COVID where they had volume growth and margin improvement on a structural basis from 3,500 to almost 5,500 or 6,500 in APL Apollo's case as well. So after a brilliant 2-3 years, they had one really somber year where they had okayish volume growth plus inventory losses, which meant that some of the valuations of these companies came down significantly, which represented a lot of value to us. And within that construct, when we kind of tried to look deeper, we came across two companies which are two of our top holdings out of top three holdings in our portfolio, which is Surya Roshni and Shankara Build Pro that we own. Specifically coming to Surya, Sonal, they are India's second largest steel pipe manufacturers, ERW steel pipe manufacturers, and they almost did like 0.9 million tons last year, and they're growing at 12 to 14%. This year, I think they will grow 15 to 18 or even 20%. And they're doing margins in the range of 5,500 rupees EBITDA per ton. Now, if you think about, and they're building up the capacity to go to 2 million tons over next 3 years. So if you put all of that into the construct and you think about this company at 1.5 to 1.75 million tons, can it do 5.5, 6,000 rupees EBITDA per ton? You are looking at almost 1,000 crores EBITDA just from the pipe division. They actually also have an electrical division where they do around 2,000 crore of sales and do 170, 180 crores of EBITDA. If you compare it to similar players in that electrical segment itself, the whole 180 to 200 crore EBITDA business of electrical gets valued at 5,000 crores in something like a CG or a Crompton, if you look at it. And then put together, this whole business of Surya Roshni was available at 5,500 crores, where you can get 200 crores of or 180 crores of lighting EBITDA and 550, 600 crores of current EBITDA of steel, which can grow to 1,000 crores, which is represented significant valuation arbitrage in our mind, in our understanding. So which is why we love Surya Roshni, and it is one of our largest holdings.
One of your largest holdings indeed. It has a somber last 12 months as well for Surya Roshni too, down 8% in the last 12 months. But Viraj, the other name that springs up and that has done very well over the last 12 months is Shankara Building Products. That is also one of your largest holdings. And with the demerger now almost falling into place, other than the business, do you see this also now as a value unlocking opportunity as well?
Oh, absolutely. So what will happen is once the demerger goes through, today you have a business which is cumulatively doing an ROE in the range of 12 to 15%. But if you were to like just put a pro rata balance sheet of these two businesses, one is manufacturing and another is distribution business, you will see one business which is growing at 20-25% and will do 35-40% ROC, ROE, and also generating reasonable cash flow, will and should be valued differently from the manufacturing business, will be available even today at in the range of close to 15 times EBITDA. So, which if you were to compare that kind of business model, that kind of return ratios, that kind of growth with any other segment in the market with similar business architecture, you will see significant valuation discount even after Shankara has gone up so much. So I think market has re-rated it slightly when this demerger has come to fruition. But once it gets demerger, gets some of those numbers will get reported over next 12 months. You will see, in our opinion, another leg of re-rating that will happen in Shankara Build Pro even from here.
Viraj, hi, morning. The other stock, Globus Spirits, that's about a 10% weightage in your small cap fund. At what price did you enter? Right now it's about 1,050. And how much more upside do you see in it? And how does it compare with competitors? So why Globus over, say, a Radico Khaitan, Tilak Nagar in the alco beverage space? Or United Spirits?
So in the United Spirits is probably an out of syllabus question for somebody like me. I don't look at.
I agree. The size is very different.
Yeah. So again, so let us go back to what happened in alco beverages. Alco beverages, apart from IMIL and IFML businesses that they do, a lot of these alcohol companies also have ethanol business, which is bulk ethanol, which did significantly well apart from FY25. So they had really good years till FY20, 22, 23, a part of 24 as well. But because of government policies and the pricing at which they were getting broken rice from FCI, all of these went into technical shutdowns for a large portion, or they were really manufacturing at a lower utilization, and which is what changed post January. If you look at the new regulation that FCI has come up with, which is when we bought. So we haven't really bought much cheaper. We bought roughly 850, 900. So not really too much change from where we bought. How we think about this business is this year can do 170, 180 crores EBITDA in the bulk business, 170 to 180 crores EBITDA in the country liquor business, and their IMFL business will break even this year. So looking at an alcohol business which can probably do like a 330 crores EBITDA, which is available at around 3,000 crore market cap, which is less than 10 times EBITDA in Alcobev, which is kind of unheard of. What will also happen is over next 2-3 years, there is a reasonable possibility that the consumer business, which is IMIL and IMFL, will grow to a scale of 1,500 to 1,800 crores revenue, and which will probably get demerged from the bulk business, which should again lead to significant re-rating for the good part of the business.
Okay, Viraj, that was a comprehensive analysis of these three names. Very helpful. Thank you so much for joining in. Looking forward to more conversations on different aspects of your portfolio building and individual names as well. Thanks a lot for joining today. With that, we'll slip into a short break. Management of Neogen Chemicals will join in next to discuss the business outlook and more. Stay tuned for that.